the Chinese, they very tightly control their currency, to state the obvious. And this looks to myself and probably everyone else, certainly the markets, as a intentional, you can call it a soft pushback, call it a slap in the face, but it's a way to very effectively offset the tariffs. And in that sense, from President Trump's perspective, and he is extremely sensitive to this, it looks like an escalation. I suspect that's why the markets are reacting the way they are. How do you get out of it? Well, the only way is negotiation, and this is the kind of tit for tat we've seen. I mean, most recently, I think the president was unsettled by the fact that the Chinese were slow walking some of their agreements to buy more agricultural goods from us. He didn't like that, and you saw him threaten to slap another 10% tariff on $300 billion more of goods from China that would begin September 1st, and those are mostly consumer goods. So I just have a really hard time seeing much of an upside here.
It's and by the way, if you tweet me out, I'd be honored, Jared. Thank you very much. It is the nation who flinches first that is going to be beat up politically in their own country. So it's hard to see a path out of this when both sides politically, Xi Jinping is facing the protests in China. He's facing a capital flight out of that country.
Right.
Oh, by the way, we have a presidential election in the United States next year. Does this just sort of drag on and maybe worsen all the way to next November?
So that's an interesting point. First of all, let me say, though, I don't think that either side wins from a trade war. The only way to win from a trade war is to not be in it. Look, in terms of the politics of this, if there's any road out of it, that's the only one I can see. That is, President Trump, I believe he plays, kind of yo-yo with a lot of with a lot of the key variables in this trade war. So, he can make the markets go up and down like this by escalating or de-escalating. If this next round of tariffs on China hit more consumer goods, as is very much the case if you look at the list of goods facing this new tariff, that's going to be felt more by American consumers than anything in the past, which has been much more intermediate goods. And Donald Trump in 2020 could decide that he just doesn't want to ding the American economy like this in an election year. That could motivate him to pull back for his own, re-election bid reasons. But I feel like that's a thin read this morning.
Well, it will and it won't from the consumer side of the story. And listen, it's 5:35 in the morning in the East Coast of America, so I don't want to do a bunch of math, and my math will be very rough. But here's why Americans care about this currency move. If something from China costs $100 and it hits the port of Long Beach, California, 10% tariff is slapped on, now it's $110 as it trickles out into the consumer economy. If the Chinese currency weakens by 10%, then that good effectively costs $90. You slap the 10% tariffs on it, it's actually now $99. No. It's actually now less expensive.
You're exactly right.
Than it was. And so it mitigates the impact. I do wonder, is there going to be a consumer impact if the currency keeps falling?
You're exactly right. And that was the point I was making earlier when I said this is a very explicit pushback on the tariffs because it offsets them one for one, precisely as you said. However, the key word here is escalation. The math you just ran through is not unfamiliar to Trump administration hawkish protectionist economists. And so that 10% could become 20 or 25%, very quickly if this thing escalates. And what's even more worrisome is if it spreads to autos from Japan or the EU. I don't think that's going to happen. I think that's a bridge too far even for this team. But that kind of offset will not go unnoticed.
By the way, we've thought there's been a lot of bridges too far, and apparently those bridges, they keep getting torn down.
Fair point.
What if we get the tariffs on Europe, Jared? What happens?
Okay, so I never know exactly what to make of these numbers that folks are throwing out on their macro modeling of these effects. For one thing, it's very hard to know what the retaliation will be, and you have to build that into the model. In fact, what we're seeing this morning is a form of retaliation, the weakening of the yuan. But if you look at the models, escalating to autos from, say, Japan or from the EU has the possibility of dinging GDP growth, by more than half a point. And that's a very big deal.